Thanks for joining us at xn.com. It's the week ahead. I'm Christina Marujas, and with me today is our senior market analyst, Haralambos Pisuras. Now, Haralambos, it's likely to be a rather quiet week for the U.S. dollar, at least on the data front. However, that could be easily turned upside down, depending on Trump's tariff rhetoric and attacks on Fed Chair Powell. Where are we currently when it comes to the United States?
Hello, Christina. The US dollar remained strong this week. It continued to attract tariff-related safe haven flows, but it also benefited by the upside risks tariffs are posing to US inflation. Now, on Tuesday, the CPI data revealed that inflation accelerated in June, with underlying inflation mainly driven by a strong increase in core goods. This was seen as a proof of tariff-driven inflation. And it's in line with Fed Chair Powell's view that the impact of tariffs on inflation will start appearing during the summer. This prompted investors to scale back their rate cut bets, nearly erasing the probability of a July rate cut. Even September is not a done deal now. The probability of a quarter-point reduction at the September meeting has dropped to 60%. Now, next week's agenda includes the preliminary S&P Global PMIs for July, due out on Thursday, but earlier on Tuesday, Fed Chair Powell will speak at a conference hosted by the Federal Reserve. Now, with US President Trump, as you said, ramping up his attacks on Powell lately, it will be interesting to see whether the pressure has affected the Fed Chair's stance. Now, should Powell insist on defending the Fed's independence, which is what I expect him to do, and highlight once again that they should remain patient and wait for more data to reveal the impact of tariffs on inflation, I think that the dollar is likely to extend its recovery. Now, Thursday's PMIs will also be scrutinized, as they will provide an updated picture of how the world's largest economy has been performing in the midst of all this tariff-related uncertainty. I believe that the prices charged sub-index and also the employment sub-component will likely draw extra attention. We also get existing home sales for June on Wednesday from the US, and also new home sales on Thursday.
Now, Haralambos, let's cross into Europe. The euro will likely take its cues from the European Central Bank meeting on Thursday and the Eurozone PMIs. Now, to be fair, the single currency has been fairly firm lately. So do you think this week's events could add further support to the euro?
At the June meeting, the ECB cut interest rates by 25 basis points. But officials hinted at a break, with a report hitting the wires a few days after the decision, noting that there was a broad agreement that officials will take the sidelines in July. So, according to money markets, investors now expect a pause next week. They are pricing in only one additional quarter point reduction before this rate cut cycle ends. And they are fully factoring that rate cut in for December. However, even if the bank keeps rates unchanged, as it is broadly expected, Trump's threats of 30% tariffs on European goods could complicate the bank's decision and could prompt Lagarde to appear more concerned about the trade landscape. So, if indeed Lagarde appears a bit more dovish than previously, I think that investors may start bringing forward the timing of the next rate cut, which could weigh on the euro. Now, a disappointing set of PMIs ahead of the decision could prompt traders to add to their rate cut bets even before we get the ECB rate announcement.
On the other hand, the Bank of England, Haralambos, is expected to cut rates at its August meeting coming up, despite the pickup in inflation. Now, could this week's PMIs potentially change that notion? And what could that mean for sterling?
Yes, the Bank of England is expected to cut interest rates in August, despite the acceleration in inflation. But that's because officials were dovish even as they were already aware about a potential acceleration in consumer prices this year. They were, at their latest meeting, they were more concerned about growth in the labor market. So the PMIs may have the potential to shake rate cut bets more than the inflation data. So if we get improving PMIs as we did in June and the trend continues, this could allow investors to scale back their rate cut bets. Even if market participants remain convinced that an August rate cut is appropriate, they may push back the timing of the next reduction from December to February next year, which could still prove positive for the pound, even if the August rate cut probability remains elevated.
And Haralabos, before I let you go, let's also have a look on Wall Street. The earnings season is well underway, and this week markets are expecting earnings from tech giants Alphabet and Tesla. What are we likely to see in their earnings, and how might their stocks perform?
Now, getting the ball rolling with Alphabet, results for the previous quarter exceeded estimates, but for this quarter, analysts expect growth to slow. The rise of AI chatbots like ChatGPT has undermined Google's search business, weighing on the advertising revenue. Therefore, investors may be on the lookout for clues at how will the firm be able to expand its user base of its own Gemini chatbot without further hurting its traditional search usage. Now, with the stock's forward price to earnings ratio falling this year, I believe that if we get slightly decent results, this could help the stock extend its latest recovery. Now about Tesla, its first quarter report revealed that revenue fell 9%, with management withdrawing its full year outlook, citing evolving trade policies and certain macroeconomic conditions. So the spotlight this time is likely to fall on the 2025 guidance, as well as to any comments by Elon Musk on tariffs and politics in general, especially after his public spats with US President Trump. Now, investors will also be eager to learn updates about the robotaxi initiative. Following reports of erratic driving after the launch in Austin, it will be interesting to see whether Musk will address safety concerns and restore confidence in the firm's autonomous plans. If he fails to do so, I believe that Tesla's stock is likely to come under pressure.
I see. Haralabos, thanks so much. This was The Week Ahead at xm.com.